Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will examine the restrictions placed on practitioners with respect to solicitation and advertising. The Internal Revenue Service has several very specific rules in place to guide practitioners with respect to soliciting and advertising. Whether a practitioner chooses to advertise his or her services through direct mail, television commercials, or even in the phone book, certain rules must be followed. Most importantly, a practitioner may not make any false, fraudulent, or coercive statements or claims in any advertising or solicitation. Practitioners are also prohibited from making any solicitation that violates federal or state law. Another important rule for practitioners to consider when advertising has to do with the wording used in the advertising. For example, a practitioner is forbidden from using the word certified when describing the practitioner's relationship to the IRS. Practitioners must not imply an employer-employee relationship with the Internal Revenue Service. Practitioners may describe themselves as admitted to practice before the Internal Revenue Service, or enrolled to represent taxpayers before the IRS. In the case of tax preparers, the IRS suggests the phrasing designated as a registered tax return preparer by the Internal Revenue Service. Practitioners must use care when choosing the phrasing for all public advertising and private solicitations. Practitioners must also obey several rules concerning the communication of fee information in advertising and solicitations. Practitioners may publish information about fixed fees for specific services, hourly rates, the range of fees charged by a practitioner for a particular service, or fees charged for an initial consultation. Practitioners must be careful to communicate whether fees will cover associated costs or if the client will pay costs in addition to the advertised fees. A practitioner must not increase any communicated fees for at least 30 days after the publication of the advertising or solicitation. Finally, practitioners must be sure to keep copies of all advertising and solicitations. In the case of radio and television broadcasting, the practitioner must keep an actual recording of the advertising. In the case of direct mail and e-commerce communications, the practitioner must keep a copy of those communications, as well as keeping a list of the persons to whom the communication was sent.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.